Well, two more Mag 7 stocks making big moves this morning. Alphabet and Microsoft both climbing higher after reporting results that showed their big bets on artificial intelligence are paying off. Alphabet reporting first quarter ad revenue rose 13% and cloud revenue jumped nearly 30% from a year ago. Alphabet CEO Sundar Pichai touting the company's investment in AI and technical innovation on the earnings call. Take a listen to this.
We are committed to making the investments required to keep us at the leading edge in technical infrastructure. You can see that from the increases in our capital expenditures. This will fuel growth in cloud, help us push the frontiers of AI models, and enable innovation across our services, especially in search.
For more on these results, Ted Mortonson, Baird Technology Desk Sector Strategist, and Rishi Jaluria, who is the RBC Capital Markets Software Equity Analyst, join us now. Gentlemen, thanks so much for kicking off and kind of ahead of today's trading session with us. We got to break this down, and we just heard from Google or Alphabet, so we'll start there with what Sundar Pichai had to say. Rishi, I want to go to you first. I mean, you hear these comments on the earnings call. How does that change your thesis, your way of thinking around this name, and your own kind of rating that you have on it?
Yeah, absolutely. And remember, I cover Microsoft, so I can kind of talk about that and then maybe more broadly on AI. But look, the commentary out of both Google and Microsoft, I think, tells us that there is real demand for AI. And, it's happening kind of at the data and infrastructure layer for right now. But what's really happening is there's actual money being put behind this. It's not just hype. It's not just, people talking about it. There's actual capital being put to work. Look at, Microsoft, where they said about 7% of growth from Azure came from AI. That implies that AI is already a $4 billion ARR business for Microsoft today. And that's not even counting any benefits that we're going to see from Office Copilot. So really, I think this is just speaking to the fact that although it is very early days for generative AI, there is real interest and real capital being put to work with this.
Ted, what do you think? Do you agree that this AI narrative now is back on track and back in favor for investors following these two results?
First of all, thanks for having me, and I do agree with your guest. We are going through really a generational infrastructure build with right now a lot of semiconductors, a lot of hardware, a lot of networking as that Gen AI stack gets built out. So we're seeing these CapEx numbers. If you look at where Google spent this last print, it was $12 billion. Microsoft CapEx was $14 billion. They are spending a ton of money on infrastructure, and what gives them both the advantage is their data center footprint already exists, and their internal expertise in generative AI. They're hitting it from a little bit different tax with Microsoft investing in OpenAI, and Google has a lot of internal Gen AI through DeepMind. So both are juggernauts, and this market's just starting right now on the infrastructure side, and soon will translate in the software layer, probably in 25 on the enterprise side.
Rishi, how soon do some of the capital expenditures that both of these companies, but specifically in the company that you cover in Microsoft, and excuse my Friday slip earlier as well, in the company that you cover, how quickly does this need to pay off for them in order for investors to really remain confident?
I think Microsoft is in a very unique situation. The fact that they have real AI revenue today, right, going back to that $4 billion ARR number. And one comment that I'm sure you may have caught that Satya was talking about on the call yesterday is there's not even enough capacity to meet demand. And it's not just GPUs and server capacity. It's literally things like power and cooling that there's just not enough of. So I think as long as that AI number continues to tick up, as long as you start to see evidence of things like Office Copilot actually tracking ahead of E3 and E5, I think investors will be patient with that CapEx number. And that's why, Microsoft stock isn't being punished on these high CapEx numbers, because there's the demand to back it up. If there was not that demand, or if demand started to be light, then I think investors would start to question those CapEx investments.
And Ted, I'm curious to get your thoughts on that, because it was very interesting. I guess you could make the argument that maybe Microsoft and Google, Alphabet really forecasted it better than Meta did. But Ted, why do you think we saw such a different reaction to Meta's results when they were talking about CapEx and the spending that they're doing there versus what we're seeing from Microsoft and Google, given the massive ramp that they have also put forward in investments in AI?
I think it's just a game of positioning. Meta was extremely crowded going into the print. There's some people that didn't look, that quite frankly didn't like some of the unprofitable spend. But Meta is almost to somewhat is very attractive down on where it got hit the last few days. I would say though that Microsoft has a huge advantage here just because of their enterprise footprint. And right now we're looking at roughly 5 major clouds that are going to consolidate this Gen AI macro. One thing that the investor community, though, does have a little bit of some heartburn with is if you look at enterprise spend on the IT side, we're up roughly about 3% per year. It's just not all a panacea out there. The Global 2000 has to find a return on invested capital that makes their gate that they can actually buy this Gen AI and make money. I think one of the near-term calls that was very interesting at the end of the call, the IBM CEO basically said, "Hey, listen, I've got my consulting revenues are a little bit under pressure because the Global 2000s are trying to find a ROI component to this Gen AI. They're not there yet. It's coming. It's just a matter of time before it arrives." As it relates to Meta, it is a juggernaut in AI, and with their LLM models coming forward, it should be watched very, very closely.
You know, Rishi, as we were looking through some of the elements and listening into the call as well, I mean, one of the huge things that jumps out specifically about Microsoft is the management and how this company is managing so many different arms of business, whether that be LinkedIn and the growth that they're expecting to see there. AI touches that, whether it's cloud and AI touches that. It seems like they're successfully weaving this narrative into it, but the pricing mechanism, how are they going to need to kind of put that forward into market continuously to make sure that there isn't churn off of some of these services that they've started to really introduce to their client base?
Yeah, I think it varies from product, but I think you're exactly right. Like with Microsoft, the strategy is to bring AI throughout the entire portfolio of products, and I think that goes to, Satya being a very forward-thinking, visionary CEO, and the fact that Microsoft has this relationship with OpenAI going back to 2019, years before any of us on this had heard of ChatGPT to begin with. From my perspective, I think Microsoft is going with the right monetization strategy, which is something like GitHub Copilot, where there's actual tangible benefits, right? Developers are really 30 to 40% more productive using that. You charge an amount that's a very easy to digest amount, that I think that number will go up over time. Same with Office Copilot, right? It's being priced at a level that I think any enterprise, as long as it can get past the security and governance concerns, can start to use and say, this is worth it. Let's start to pay for it as long as the benefits are there. In other areas, I think they'll just give it away, right? Dynamics, I think they can use AI as a way to gain share from the incumbent CRM vendors. LinkedIn, I think there's ways to bring AI there to just get more user growth and more conversion of free to paid. So it really is going to vary from strategy, but ultimately, whether it's direct or indirect, AI will contribute real revenue. And even if we think about Office Copilot, if it can track anywhere close to like E5 adoption in the next 3 years, Office Copilot itself can be a multi-billion-dollar business, and that's assuming just a 2 to 3% penetration rate.
Ted Mortonson, Baird Technology Desk Sector Strategist, and Rishi Jaluria, who is the RBC Capital Markets Software Equity Analyst. Thank you so much for taking the time here this morning. Really appreciate it, guys.
Thank you.
Thank you.